Hi everyone, my name's Stuart Simms. I'm the Group CEO of XLMedia, and my job today is to just walk you through the 2019 year-end results. So I joined the company back in October of last year and joined with a clear ambition based on my previous experience about how we could transform XLMedia into a powerhouse in the performance marketing arena. Clearly, we come with a strong track record in performance marketing, having operated particularly in the gambling segment for many years. And simplistically, our job is to introduce consumers to brands. And if successful, we then can take a revenue share or we get paid to introduce that consumer to the operator. Our business is focused in 4 key main verticals at the moment, with personal finance, gambling, sports, and then also technology. And it's fair to say that most of our revenue comes from a few number of sites, but then a long tail of sites that also support the verticals in which we engage. We operate globally. We operate in a number of different markets, but we do have a polarization, as you can see a bit later on Scandinavia as being our core geographies that we operate in. Just to give a quick snapshot around the numbers, nearly 80 million in terms of revenue. Our gross profit is just over 50 million. With an adjusted EBITDA of 33.5. I think what's important to note, we have a very strong balance sheet that can empower us to be able to grow with 29.9 million of cash for us to consider as we look at acquisitions and investments and growing the company. The other thing that is a mainstay of the business is we already operate with over 300 customers. So customers for us are the brands, financial institutions, or the operators that we support their marketing activities. This gives us incredible confidence when we look at moving into new markets, new opportunities, that we already have significant tenured partnerships in place to be able to support us. We also have a reasonably substantial employee base of over 360 people that are based between Israel, Cyprus, UK, and that I'll talk more about in the future in the US as well. And our sites target consumers in over 23 countries. So we already support multiple languages and localize many of our sites into those markets to be able to support an engaging consumer experience. So I'm just going to move into a full year overview of 2019 and talk through some of the key highlights. Clearly, I was tasked with, in October, bringing in and transforming the executive team, which we're well on the path to being able to develop, with announcements with Ian as CFO and then also with Sarah as the Chief Transformation Officer. I'm very excited to have such a team who has that transformation experience and is helping us really plot and path how we can execute and change our business to support our future ambitions. That means a really deep dive into us understanding our operating model and then really trying to figure out how we go after growth in some of those new markets and new territories that we're looking to address. And one of the key things that we're looking to put in place is this transition from moving from running a quantity of websites to moving to more quality premium websites. So there's 4 key areas of investment that we're considering at the moment and working through our transformation plan. Firstly, the operating model, which is really thinking through the processes, the resources, the functions, the location of our resources to be able to support our strategic ambition and growth. Secondly, we're thinking through how we can really benefit from technology to help us utilize the vast quantity of data that we've got to make more informed decisions around perhaps dynamically changing our sites. It could be understanding our data to evolve our pricing structure or our business model work. Another area of investment is really understanding the US market, particularly sports, to make sure that we've got the right technology, the right expertise, and the right people in place to be able to capitalize on that market opportunity. Arguably, we're late to the market, so we need to think very carefully about our investment as we go forwards. And that's a key consideration for us and an area of investment that's taking up significant time and attention. Finally, it's very important for us to continue to develop our existing experience and our existing capability and take that into new geographies and new territories. So we are looking at how we can invest and take gambling, gaming, and sports into some of those new emerging markets at an early stage in terms of their maturity. But one of the key things I'm sure, and I have been asked by many investors, is, well, what's happening with Google and why did it happen in the first place? And I think it's important to note that this is quite an unprecedented impact that we're seeing on our business, with over 105 sites that were manually demoted by Google in January of this year. We believe it to be because many of our low-grade legacy sites that we hadn't necessarily maintained and managed were clustered with our premium sites and then all deranked at the same time. The guidance from Google has been very clear. We must act in improving the content and ensuring that we meet the terms and conditions before we can get the sites considered for re-ranking. We're very optimistic, having taken third-party advice and had constant dialogue with Google, that we would anticipate getting the premium sites back online in the second half of this year. And then with further sites coming online over the course of the next 6 to 12 months. It's also important to note that we're using this as an opportunity for us to really think through about how we operate, maintain, and manage those sites in the future, reviewing not only the technology we utilize to build the sites, but also changing the way we work and our working practices to support a more branded premium experience. So Google can be seen in some ways as being a real trigger for us to think about how we need to change the business and as a catalyst to making some of those changes. And as directed in previous correspondence and trading updates, we continue to expect the current monthly reduction in group revenues to be between 1 to 2 million. Further to this, obviously, early part of this year, we also started to see COVID-19 having an impact. It's important to note that historically, our employees have not been used to having any flexibility in their working practices. They've not necessarily been allowed to work from home and didn't necessarily have the technology to do so. So again, we found the COVID-19 to be another catalyst for change in terms of our working practices, using it as a way to offer our employees more flexibility about how they work. Now, in terms of numbers, rather than working practices, COVID-19 is having an impact both on our sports business and our financial services. Sports, because many of the major leagues and tournaments have been cancelled or postponed. And then in personal finance, many of the banks are withdrawing some of their marketing efforts to ensure that they understand and can react to the potential financial crisis. So we are seeing slight changes in terms of personal finance, but due to the flexibility of the team and some of the new products that we're looking to bring online, I'm sure that we're going to come out of this stronger, having had a more flexible approach to the products and services that we offer. But the good news is we're also seeing that this decrease is being marginally offset by increased demand in other verticals. And it is allowing us to test and learn and incubate some new areas of products and services that we're looking to market going forwards. Gambling, cybersecurity continues to grow, as does our network business, Reef Media. So these are certainly helping to offset some of the financial impact of COVID-19. Clearly, we're still uncertain long-term about the true end financial impact of COVID-19, but I feel strongly that we're managing both the cost base and have set plans in place to be able to deal with this, no matter how long this crisis continues. So let me talk about our current trading and outlook. We did make a solid start to the year before Google deranking COVID-19 came into place, which presents some short to medium term challenges. In particular, with Q2 looking a very challenging period, specifically because we are looking to accelerate and use this period to drive the transformation and help and support the business in terms of getting towards the operating model we believe to be fit for purpose to drive growth in the future. But like anything, a crisis is also presenting opportunities, and we are reviewing some very attractive acquisition opportunities at the moment, which could really help and support us in accelerating our goal to change the business towards becoming a more content-rich premium publisher that executes and manages a series of branded sites globally. We believe that this year, the year-end trajectory and renewed operating platform will give us a very strong basis for growth and gives us significant confidence in the 3-year plan that we're putting in place for the business. It's important to note, however, that also we've had a change in terms of our dividend or share buyback program, neither of which are being considered for the foreseeable future. So I'm going to briefly now talk about the financial results. And what's important to note is, as a consequence of both COVID-19 and also the Google deranking, we went through an impairment process with PwC. So you'll see from the income statement some substantial changes to our profitability, which reflects the work that's been done. The other aspect to this is I wanted to talk through the revenue diversification. It's very important to us as we think through our future strategy, how we move from having a very polarized revenue streams coming out of Scandinavia to seeing an increase in North America. And North America will be one of our key growth engines for the future as we look to make acquisitions, investments, and whilst also making some organic growth. You will also see that we're still heavily reliant on gambling, with personal finance only making up 16% of our revenues. We anticipate seeing that change and diversifying our sectors and industries that we operate in over the course of the next 3 years. Finally, it's also important to note that we're seeing a growth in terms of CPA becoming more of a dominant business model that we have to reflect upon. And this is partly supporting our analysis that we need to be using technology and machines to help drive and utilize our data harder as we make that transition to really harnessing and benefiting from the CPA business model in the future. Now I intend to go on to the transformation strategy and really lay out some of the changes we've made to the business. The rationale for change was really clear to me when I came into the business. There was a real positive shift required for us to move from operating a quantity of websites where we built our operations and our procedures to be able to cope with significant numbers of websites, to move to us then really looking at quality websites, which really did a great job in terms of content, rich media, consumer engagement. And that's the key message that we're trying to land as part of this announcement, is that shift from quantity to quality, which is going to be a big change for us, both culturally and how we operate our business. It's therefore super important for us to then think about how we evolve our core practices, our business group structure, to really go after new markets and territories that we want to build those or manage those premium sites in. So we're pursuing 3 strategic goals. 1, consolidation of our assets and our resources to focus on that premium quality. 2, we're going to double down and really focus on US sports and personal finance with a major focus of investment, acquisition targets, and also resources on the US market. And then thirdly, we're going to continue to invest in regulated, mature markets, which we believe can offer more stable revenue growth and long-term benefits for us in terms of offering us predictable, reliable growth for the future. So I'm just going to delve into some of those in a bit more detail. So firstly, the consolidation of publishing assets. At the moment, we have an ongoing initiative to review all of our sites and make sure that we consolidate them down to a few key premium sites and brands per territory. It's incredibly important for us to build strong brand recognition for those when we make that change and ensure that they're highly profitable and driving really great consumer engagement and understanding of the market. Our opportunity is to really improve the consumer experience by utilizing our data and intelligence capabilities and assets and technology groups to help support that transition. And in principle, we're very lucky as a group to have some existing sites in personal finance that can provide to a degree a blueprint of how we should be operating, managing and developing these premium sites that already have a very good understanding and engagement with consumers, have a very rich content stream, and also don't just work on a performance basis. We actually truly publish significant content and media to engage consumers to make sure that we actively engage with them on a regular basis, which we believe drives that really deep longevity in terms of consumer engagement. When I reflect upon the investment in US sports and personal finance, it's important to note that we opened our first office in the US this year. We did that in January. It's a clear marker for us to say that we will be investing further into the US and truly understanding the market opportunity. Having been lucky enough to run US businesses, I'm very conscious about the structure, the organization required to capitalize on such a rich market opportunity. And it's very important for us to think through how we can work on a state-by-state basis, particularly in sport, as the different states legalize gambling. But it's also brilliant for us to already have such a strong foothold into the personal finance industry in the US. And it's important for us to then really start to build local resources, local capabilities to support those already well-established brands and help them grow further. Further to that, we are looking at a number of acquisitions to help support the growth of that, whilst also trying to look at those brands and see how we can take them to a more global audience. So again, one of the other key aspects for us is to make sure that we have a balanced portfolio of assets. Now, what I mean by that is, at the moment, we're heavily polarized in terms of unregulated markets and significant revenues coming from casino. I believe as a company, we have to balance more our portfolio to make sure that we have the right risk reward structure and we have the right investments in opportunities. So we're thinking very carefully about which markets we're investing in, which markets we need to maintain, and also considering which markets we might be exiting in terms of both the vertical or the geographies that we operate in today. So I can see a time when we will be focused both on regulated markets with a particular focus on sports and personal finance. I see this as great growth opportunities and ones that give us stable income opportunities for the foreseeable future. So I think it's very important for us to look at this balanced portfolio and change culturally how we operate the business, becoming more of an investment company that thinks carefully about where to place its bets. And that's a key organizational capability that we're trying to build at the moment that will support this different mindset and change of approach. To finish up, I'd like to provide a sort of brief summary of what we've discussed so far. I'm incredibly optimistic about the business, the capabilities that I've inherited, and our opportunity to transform the business against the opportunities that I've outlined previously. We have a new management team that we're starting to build that has already come with a wealth of experience and knowledge about transformation. And we are driving that plan and that agenda on a day-to-day basis. We're already making shifts in the business to focus on quality over quantity and consolidating our efforts and our resources to focus on those few sites that we want to operate very successfully. That includes not only the resources, but also the technology required to be able to support that ambition. We are going to continue to run and operate our business, focusing on regulated markets, which we believe will give us a solid framework and a very stable revenue growth for the future, whilst we incubate new markets like the sports and personal finance segments into the US. So 2020 is both a challenging, but more importantly, a very transformational year for the business, and one where I believe that we will exit the year with a very strong operating platform, cohesive executive team, and a clear strategy for us to be able to then execute and be successful to drive growth and shareholder value in the future. And I thank you for your support, and I look forward to communicating more on the successes that we have in the future.